So this is definitely our industry challenge at hand is the expansion in probably Q3 of next year of more expanded hour trading. So we will go through and talk about the role of technology and infrastructure. So I know, Tom, this is definitely a topic of your skill set. What role do technology and infrastructure play in enabling a sustainable 24/5 trading model?
Yeah, so first thing to note is 24/5 trading is actually happening today. There's a representative from Bruce Markets who's here. You know, the overnight trading has been happening for years. What we're really talking about, and a lot of this is extending what the ATSs have pioneered into the regular exchange sessions to bring the markets, the stock markets, into that same kind of time frame. Really, the technologies are really about extending what we've been able to successfully deploy from our current 4 a.m. to 8 p.m. into that longer term duration. So not necessarily thinking about brand new technologies, but extending the things that make our markets so competitive, right? The protections, the resiliency, all those expectations need to be rebuilt to port out into a 24-hour environment. So what we really see is major investment in the infrastructure systems to support the extension of those hours. It's not as simple as flipping on the machine 23 hours a day, 24 hours a day. You know, all of those considerations, the protections and infrastructure responsibilities that the exchange providers has and the ATSs have today, you know, need to be maintained. So that's really been the technology focus of ours.
And I'll roll back slightly and let you also introduce yourself.
Oh, Tom McGuire. I'm in NASDAQ. I've been in the data business for 10 years. I used to lead our product team and have recently shifted to focus on strategic efforts around 24-hour trading, tokenization, digital assets, et cetera.
And Michael, if you wouldn't mind introducing yourself.
Sure. Mike Eschman. I head up ETF capital markets and business development at Rex Financial. Rex is a ETF provider, $8.5 billion ETF provider. A lot of our products are very retail centric. So this is a perfect topic for us. 24/5 trading is largely driven by retail. So very happy to be here and maybe give some perspective from, you know, outside of the sort of exchange mentality.
It's great to have you all here. We definitely appreciate you participating. And so Daryl, we've had a good intro from you as well. And I would like to, going back to 24/5 trading, give us a little more of your insights on sort of the broad scope of it, and you know, your definition of it, your impact, and how you're also seeing it.
Well, you know, my biggest background is futures trading. You know, I started off in stock and options, and but I mean, I'm used to be able to. It opens it up to the retail market. Now people can, you know, have a job, come home, and trade. You know, there's going to be, I think, 1,100 something symbols available right out of the gate between ETFs and of the major indices. So just a normal person now can actually get into it. I think that's going to bring a lot more people into the market that before could only, you know, maybe place an order, you know, and then let it get filled or not get filled, you know, during the day while they're working. I remember I used to trade at night, you know, whenever I had my full-time job before I was a trader.
Yep.
And so it just explores that. Also, it's going to bring in the Asian markets. So we're going to get that really coming in full throttle. It extends, of course, the European markets out. And so I think just the overall adding all the new market participants will be huge. It's going to play with earnings. So because, you know, it used to be a lot of times, you know, earnings came out after. And now there's only going to be a 5-minute close, 4 to 4:05. And those earnings that come out at 4:10, 4:15, 4:30. Well, you can, a lot of those companies, you're going to be able to trade right then. So there's going to be a whole new, you know, impact on liquidity. There'll be an impact on liquidity on the open. So because right now, yeah, it'll have, you know, there is an open, but it's only a 5-minute closure period before it, you know. So, you know, opening strategies will have to be redeveloped a little bit. And, but again, it also lets people trade before work, you know. So I'm excited about it. I think it's going to really add a lot to the market.
Yeah, I've heard that from my team as well. Engineering, you know, we're busy during the day. We're working in the markets, but not necessarily trading our own portfolios. And it's a nice democratizing step, I think, for everybody to be able to go home and actually attend to their portfolios outside of work hours as well.
Yeah. to Darrell's point, futures, swaps, sort of derivatives that institutions are using to hedge overnight, trade overnight, not available to retail. So this is a way for retail to participate and now be able to sort of level the playing field.
A bank closes, gets shut down at 2 a.m. in the morning, or some new release happens overseas, or the administration releases some statement, the Fed says something. Now you can hop in and actually manage your portfolio or hedge it in some way. So that's a whole new opportunity that people just haven't had access to before.
Yeah, that'll be an interesting evolution, especially Benzinga is a strong finance news center. When the bad news is going to get dropped from some companies, when there's right now, like you said, 4 or 5 is a great time to release some bad news. But it might be more of a 2, 3 a.m. in the morning topic for some corporate releases. So
you're gonna have to totally change their strategy.
Yep.
So I can't use that. The market's closed now. We can drop it. Yeah.
Right. So I know, Tom, the liquidity dynamics. Basically, what steps are being taken to strengthen the depth and execution quality?
Yeah. So, right now, the exchanges compete for order flow all day. And really what we're talking about is extending that now to just a longer duration. So, we're very early in kind of the launch of the markets. I think the incentive programs that we bring to market in next year, at the end of next year, when 24 hours goes live, is still very much a point of discussion. But I want to circle back on a previous point, something about the news. Remember, like one of the real focuses of ours, and it's actually been a comment that our CEO made, Adina, right at the beginning of this, is that we can't launch without protections, right? So our focus has been, from an infrastructure standpoint, how do we protect the markets and protect investors in the instances where there's this extraordinary news, right? So we've actually taken some cues from the futures market where these throttling limits are in play. We really want to incent good behavior in the markets. We want to allow for trading, but we also need to protect the markets from these extraordinary events. And that building out infrastructures, working with the industry, working with the SIP committees on limit up, limit down, and extending those frameworks that have really made and protected the markets today. That's really been our focus, is to bring those out and to ensure that resiliency and those expectations extend through the night in the case of a bank goes bankrupt or a tweet with some extraordinary nonsense comes out.
And I think one of the things that y'all done also is there's only limit hours or limit orders allowed during those extended hours between 4 p.m. and 8 a.m. So that way you don't have market orders just getting, like stop limits getting fired off on random.
That's very much a function of the ATSs as they're participating today. When the stock exchanges actually enter, December 2026 is the date that we're currently using. We do expect to extend the order types that are available. But at the same time, we also expect the institutions to become more active participants of those timeframes as well, right? The limit order functions that are deployed today are really about constraining and protecting the markets. We can accomplish that as an exchange in different ways. So you should expect, as the exchanges move into 24 hours, that there are more order types available. But as part of that, the incentive programs, the liquidity dynamics, the exchanges will be working to incent, rational behavior, especially with the introduction of institutional assets and institutional trading as part of those timeframes.
That's great. Yeah. So, Mike, I know we had talked previously about market surveillance and risk management. You always speculate whether the volumes in the middle of the night are going to be, it's going to be a different spectrum of liquidity. But in terms of the surveillance side of things, what's evolving to maintain that integrity in overnight trading?
Yeah, well, I think Tom kind of touched on it a little bit. I mean, from my perspective as a ETF capital markets expert, I'm speaking to 20 plus market makers every day, all day, globally, 20 chat rooms going at all times. 2 to 3 years ago, maybe 4 or 5 of those market makers were active in off-hour trading. And when I say active, they were sitting out there with a pretty wide bid-ask spread, just waiting for, a silly order to come through and be executed. Fast forward to today, with the huge increase in trading and retail trading, 13 to 15 of those same market-making companies are now active in off-hours trading, and those that aren't are building out infrastructure to become more active. So competition is really going a long way towards improved markets. Certainly still risk markets, but the more market makers who are competing, generally speaking, the tighter the spreads get, the deeper the markets get. The incentives that exchanges can utilize to bring in more market makers, all those things are leading to a healthier market for for traders and off hours. And I think all early morning 4 a.m. to 7 a.m. are Reg NMS, so they're protected. They're receiving the best available price across exchanges at that time.
Thank you.
Can I just an additional point? So, retail got the moniker dumb money a long time ago, and it's just not the case anymore. There's a lot of research coming out now. There was a white paper, I think it was called Nocturnal Trading, that just came out 2 months ago. And they're able to demonstrate that, like, the markets that trade overnight now are the information flow into where the open on the exchange happens at 9:30 is highly correlated, right? So looking at the market, it's not random. It's not an output of guesswork on behalf of millions of retail investors. These traders are moving markets, and the open at 9:30 is you see that price formation happen much earlier in the day now. And as the institutions begin to get involved and the exchanges get more involved, you'll see more of that. It's giant questions as to what it all looks like in 5 years from now. But we see it happening today. We see that capital formation happening earlier in the day. We see that being highly indicative of where the open happens. And dumb money is smart money. And we see that playing over and over.
Yeah, the institutions are always chasing that retail flow. And it's just, the statistics don't lie. It's just in the past 3 years, it's grown drastically.
Yeah, we've seen from business development we've participated in the APAC region. Daryl, you touched on this. Particularly Korea and Japan.
Yes.
The willingness and participation in our tech and ETF markets from that retail audience is growing spectacularly. It draws me to wonder what kind of products we can create to kind of help that trader as well. But how do you see the rise of that access working? Do you see any nuances or changes in our trading with your business, with the APAC markets?
I think, with the APAC markets out there, I mean, we already have we have a lot of affiliates. We have a lot of customers. I'd probably say, I don't know, 10, 20% at least are in those markets. And now that they're able to access equity markets as well, and not just futures or Forex or, crypto or whatever, it's going to allow, like you said, even earlier price discovery is going to be happening. Reaction to earnings is going to be a whole new thing, a whole new world. And I think we're actually going to get a lot more liquidity. I know, like, whenever CME released its micros, the liquidity was really low and the bid offers were high and all that stuff. But then people caught on. Retail traders just ate it up. And I mean, those bid offers got tight and, it became actually a very liquid market. And so I think we're going to see the same thing. And right now we have like 1,100 that are launching. And I mean, I'd see it being thousands of different, symbols very soon. So as the demand comes in, the market makers will come in, more liquidity, more symbols, and then we'll get more price stabilization across ETFs and mutual funds, because we have a global consensus happening.
Yeah, and like you all have said, the rise of electronic futures has been a good landscape to establish some of the technology, some of the, it's paved the way in a lot of ways. But one thing part of my own speculation as a personal trader, I wonder about the psychology of a retail audience, of more retail than professional audience in the equity and ETF space. How will traders handle that? Not having an established close. Do you think there will be a stronger psychological impact on our normal domestic trading base, that the markets truly aren't closed anymore? Or do you think that's already been established as a pattern with extended hours?
So I think it's going to mess with some people's heads. So just because, a lot of traders build their strategies around the open and the close, because there's obviously that's where, half the volume for the entire day happens. So, and there's still going to be an open and a close for 5 minutes, that establishes prices, establishes mutual funds, things like that, where they do their settlement price through the auction market and everything. But, so some strategies are going to have to change for institutional and retail traders alike. And, but the opportunities are going to be I think infinite. So I think, it's gonna be a lot more good than bad.
Yeah.
But I think those auctions are still going to be hugely important particularly for the ETF industry. $13 trillion in ETFs in the US now. It's, they're pegged to the close. All of these strategies are pegged to the close. I don't see that going away. I don't know if you feel differently, Tom.
Absolutely not. No, I think the open and close auction actually take on even more responsibility for setting those benchmark valuations for the course of the day.
Because you got to have them for options, you got to have them for mutual funds, you got to have them for ETFs.
Yep.
Yep.
And, the majority of wealth is held in mutual funds. And so really it will transform kind of the opportunity set that retail has. The news cycle never stops. And the question really has been, why does trading, why can't I react the same way that the professionals, the institutions can? And really what you're seeing is what someone said, democratization. You're seeing that access barrier be reduced to the point that everyone has this opportunity now. What people choose to do with it, does the herding mentality that we saw with GameStop and other things, does that continue? I don't know. I think a lot of people in this room are developing solutions to help empower traders and to help them make great decisions. And this is, extending into those sessions and extending those capabilities is going to be a really big part of that consumer education.
Yeah, but it still is very concentrated. The trading that we're seeing, pre-market, the 10 top names account for 50% of all of the notional traded in those early hours. So it's largely retail, a lot of sub $5 stocks, and then a lot of concentration in the 10 biggest securities, at least right now. But certainly that will expand as this becomes, more common.
Yeah. If you look every night, it's the Mag 7, some leverage ETFs, and then the event-based, like the news. The names that you don't recognize every day or there's been some event and people are trying to capitalize on that, before the traditional markets open. And time will tell as this process plays out, how effective we're able to do that.
So, Mike, I know the regulatory considerations, you've touched on that, but do you see the transparency of exchange-led trading changing the regulatory landscape away from, some of the off-exchange venues of the past?
Yeah, certainly. Listen, most of the overnight trading now is handled by, it was one ATS, now there's 3, particularly for Asia. And Korea specifically was 65% of that largest ATS is their business. A couple of years ago, there was an issue that ATS had to cancel.
What's an ATS?
Alternative trading system. I don't want to name names here. I don't know who's in the room, but there was an ATS who canceled over $400 million of sell orders in Korea, and that led to a 15-month suspension of trading out of Korea. It just started up again. That suspension was lifted, but Tuesday, and it was lifted. There was a lot more guidelines that had to be in place and some competitive ATS venues that could step in if they were to to have that issue again. That goes away when the exchanges are involved. They're so heavily regulated. That issues like that will not really, that'll be a thing of the past. I mean, it'll function much more like it does here, during trading hours. So, Tom could tell you way more about the regulations that the exchanges need to comply with, and that will protect all of us as investors, trading in those off hours. Again, you touched on limit up, limit down. Some of the guardrails that are not in place now will be when the exchanges are, involved.
I mean, obviously, as NASDAQ, we think a lit market is a better market. But the other thing that we constantly hear, in the walls of NASDAQ is trust, right? You have to have the trust of the investing community. That's why our focus has really been on protections. How do we think about opening the market? How do we think about absorbing these new risks while also extending the protections that have made the U.S. markets the most resilient in the world, right? That is going to be a daunting challenge. The team has spent, months, extensive time evaluating different options and what we bring to market next year. That will be the foundation of what we move forward with, that extension of investor protections, that extension of market protections, and continue to kind of be the envy of the capital markets of the world. That's the goal.
Do you think they're going to keep, this is something I'm curious about, the $25,000 rule for day trading? Is that going to stay in place?
ADT is being debated as far as I know.
Because opening with these new markets and retail traders going to come in, they're going to want a day trade, and they can do it everywhere else, but they can't do it in securities markets.
Yeah, I have heard that pattern day trading rules are being evaluated, but I actually have no insights to where that stands.
Okay.
So definitely some great innovations, and it's going to change all of our business models quite a bit, through the next year. But all for the best, because it is democratization of the markets. So yeah, definitely want to thank you all for your insights and expertise, and definitely please everybody give a round of applause to our panel.